Okay, I think we're going live. Checking my other screen to make sure I'm on. And let's see if we're up and running. Yes, we are. Okay. It's Saturday, August 22nd. The sun is kind of peeking out right now. And it's time for Real Estate with Mr. G. Okay, I'm seeing on my Facebook page, it seems like it looks like it's flashing back and forth a lot. Let me see what's coming up on my smartphone. No, it's something with my computer over there. Okay, I don't know why it's doing that. Okay. So, okay, let me... All right. Okay. I'm just hoping you have a nice, clear picture. I don't know, maybe because I'm live streaming and I'm right next to another computer. I don't know. These new high-tech things, there's always something, something going on. But it looks like on my smartphone, it looks clear. Okay. Before we start, I introduced them last week, and I hired a new producer, need help with this. His name is London Potamkin, and he wants to say a few words.
Hi, Chris. It is a great honor to be your producer on Real Estate with Mr. G. My mother thanks you, my father thanks you, my 10 brothers and sisters that are here and in the Baltic states thank you. And I, assure you, certainly thank you. May God bless you and all your descendants.
Okay, that was very nice, Leonard. Okay. We'll be talking to Leonard later on in the program. So I decided to do this topic today, understanding credit, because I always have, I don't want to say issues with new clients. When it comes to this, to getting pre-qualified and what's involved with it. And basically, and I'm saying this for all agents, we're not going out and showing a bunch of properties and we don't know if you're approved, okay? Remember, we work on commission. We don't have a straight salary. So if I was paid a straight salary, 40 hours a week, I would drive you anywhere, okay? But we only get paid when we close the deal. So, and on your side of the story is that you don't want to waste your time either. It may be that there might be some things you have to work on before you actually are qualified for a mortgage. At first, I'll use the word pre-qualified. Pre-qualified basically means that you spoke to a loan officer, and it could be over the phone, it could be over the computer, and you said, I make about $40,000 a year. I have income coming in from a rental property, whatever other forms of income you have coming in, you tell it to the loan officer. And then the loan officer will look at your credit report, okay? And based upon your salary and what he sees on your credit report, he will make that determination whether or not you will be pre-qualified, number one. And number two, he'll give you a price range to look in, or he'll give you the highest amount that you should look at for homes, okay? And we say it's not pre-approved because you're saying this over the phone. If you spoke to a loan officer and you went to the office, or again, we're doing all this online. If you go to this office and you're bringing your tax returns, your last 2 years' tax returns, you're showing either pay stubs, okay, your W-2s. Then you are showing, the actual proof. There's no mistakes there of what you said. And they will go further into your, look very quickly, or no, I shouldn't say quickly, but look at your credit reports. And at that point on the three big credit reporting agencies. And then make the determination, or at that point, they'll say you've been pre-approved, stronger than pre-qualified. Because basically, when you're pre-approved, you've shown the paperwork and you have proof, and they say, okay, you're good for it, okay? So that's the difference. Now, while you're looking, we could send to a listing agent a contract on the house that you like, and we could send that pre-qualified letter, all right? Some people have been pre-approved already where they've shown all the documentation, but pre-qualification is good enough when you are submitting a contract. And this way, the seller knows that you are genuine, that you definitely could buy this house, and there's no ifs, ands, and maybes. It's very important, okay? And this goes along. If you don't send a pre-qualified letter, the seller is not going to really consider your contract as genuine. They might hold on and they'll say, all right, you get that pre-qualification. I'm still going to show the property, but you'll be in that mix. But send a pre-qualification letter, they know that you're able to buy it, and they say, hey, I'm not going to show the property anymore until we close. Or, I won't unless for some reason something happens along the way and I put the house back on the market to be shown. All right, so that pre-qualification is very, very important. But I want to go into further with this whole credit situation because, number one, I have a lot of people who are looking, and I've been telling them, I said, get pre-qualified, and they're holding it off, and they're saying, well, when I find a house, I'll do all that paperwork. But I've had examples where that person believes that their credit is fine, and there's no problem. And once I find a house, I'll sit down with the loan officer and do the paperwork. But I don't want to say many times, but quite a few times you find out there's a couple of stumbling blocks along the way. All right, and they're not exactly there yet. Their score could be just a little bit below what the bank needs. There could be some outstanding debt that they have to clear up. It could be a judgment that they need to get off their credit report, where they could either, and there's different ways to go about it, okay? But there's always a little surprise somewhere. Not always, but you want to be ahead of that game because it might take you 2 to 3 months or maybe even longer for you to get that credit report up to par. And you don't want to wait until you see that dream house that you're in love with, and all of a sudden you can't go for it because you got this little thing on your credit report. Now you need 3 months, 4 months, or whatever. So you need to get that done. Now, if you're in the market, if you want to buy a house, you need that pre-qualification now. I've realized I've been doing this. I mean, totally, I've been in the real estate business for about 28 plus years, starting off in Brooklyn, New York. I was doing rentals. I was also a high school teacher. I would do rentals in the afternoon. Now, for the last 12 to 13 years, I've been in Virginia full-time doing real estate. And I've realized that there's the people who say, I have great credit, there's a problem. And people say, well, I'm not so sure, it's probably not that good. And they're good. It seems to be always the opposite. All right. So to put together, and I told you I used to be a teacher, let's just go over the key points of what we're going to discuss today. Is saying number 4, which basically I'm adding that on because in the area of Hampton Roads we have many active service people in the military, and we have those who are out who are vets, and they're using a VA program. And what that really said, your VA eligibility is not equal to how much you can borrow. They're two separate things. Okay, but let's go over a few things. Number 1, that was up there, and I guess I don't know if I could. Let me see. I'm going to. Sorry about that. Okay. Well, the first one is basically saying people who have no credit cards at all. They really have no debt, which is a beautiful thing, by the way. But I will work with those people, and when they speak to a loan officer, we find out that they have no credit history and not really a score. They may have a score, might be low, and there's nothing wrong with the credit history, and there's nothing wrong with let me say it again. There's nothing wrong with their credit. Okay, there's no delinquent accounts. There's no judgments, but there's no credit history. And just one more caveat to that. I mean, their salaries can be great, but remember that the banks are looking at a credit history. All right, and if you have no history, they can't judge if you're going to make your payments on time. So you cannot equate no credit with good credit. They're looking at a credit history. And number 1, the ways you go about that is to go. Now, first, what you should do, you should go to the bank where you have your checking and savings account. Now, most times when you open up a checking account now, and I really shouldn't say most times, but you get a debit card, and it looks like a credit card, but it's not a credit card. You're basically, it's a secured line of credit. You're using the money that you already have in your checking account. All right. So even though you might have this, and you say, "Hey, I do have a credit card," but it's really a debit card from the bank, which could be used, if you're purchasing, if it says MasterCard or Visa on it, or the store says MasterCard and Visa is accepted here, and you have the MasterCard or Visa logo on your card, that's fine. But it's not a debit card. It's just taking money out of your account. A credit card is really where they're loaning you the money, and you pay back either like a minimum payment every month, or you pay back the full amount. And that's what the banks or the mortgage lenders want to see, okay? They want to see a history of you making timely payments. And we're going to talk about also about keeping low balances, okay? That's also important as well. So you could first go to your bank and ask them, I want to apply for a credit card. And most of them, if you have a, I don't want to say like a really long-term relationship with them, it might be a couple of months, but they say, hey, you're banking here, I'll get you a card. And depending on your salary, it might start off at $500. It might start off, my son actually, when he went for his first credit card, they gave him $2,000, a $2,000 credit line, which is, was great. And then the banks want to see that you're paying that down, on a regular basis. And again, that's what they want to see. They want to see that recurring payments going out. And they say, okay, this guy's worthwhile, or this young lady is worthwhile. They're making timely payments. They haven't missed a payment. And what we're going to also talk about is that you can not, they're going to look at your balances, all right? So if you have 2 or 3 credit cards and you're at the top of the limit, even though you're making monthly payments on it, it's not going to look good. I mean, the monthly payments on time are important, but they want to look at your, how much you have to pay out. Because basically, when the mortgage loan officer is trying to figure out how much house you could buy, they have to see how much money you have going out to credit cards, to car loans, to student loans, and so forth. So that's all part of the mix. But just to go over the first point, again, that no credit does not mean good credit. All right. So I want to. The mix, because again, I have people call me and they say, well, I'm looking for a $250,000 home. And even if they know, they might have run the credit report on themselves a couple months ago and they know the credit is good, the bank is not going to just give you money, for a $250,000 house or a $500,000 house. They have to look at your income and how much income is coming in. So being approved, does that mean you could go for any price house? There's a limit there. So if you're making $30,000 a year, perhaps maybe the most you could get, and which is fine, in this area is a $150,000 house. That's fine, okay? All right. If you're making $60,000, $70,000, we could look in the $200,000 range and so forth. But the amount of credit that the bank will lend you will be based upon the amount of income coming in. And going back to the other one about how many credit cards you have, you see every time you, with all your lines of credit and how much you're going out, they take that into consideration. They say, well, he has to make a monthly payment of $900 a month for this house, but he's paying $150 a month on MasterCard, he has a $400 car payment, and that all takes into consideration. So even though you might have that great salary, the loan officer will then look at, well, how much is going out that he or she has to pay for the credit lines. So that's a big part of it, all right? What I also brought up before, and again, since we are in an area that we have quite a few military bases, so we have a large military population out here. So This last part might not consider you, because if you're not active military or a vet, you won't be available for this program. But there is a VA program if you are in that category where you get 100% financing. You don't need any private mortgage insurance, and that's a whole other discussion. And a lot of times I have active military duty people call me and says, well, my eligibility is $300,000. So I'm going to be looking for a house up to $300,000. But that's how much the VA will insure your mortgage, okay? That's not how much money you could borrow from the bank. That's two separate things, okay? Depending, and I don't want to even go into how they figure out eligibility. It's a complicated matter, but it depends, like your years of service and how much military pay you get as well. And the VA will say, okay, you could get a mortgage up to $300,000. And as soon as a person, male or female, say, oh, okay, I'm good for that. I could look up to, wow, I could get a nice $300,000 house. But that's how much the VA will back that mortgage up. How much house you could buy is still determined by the loan officer and the bank. And again, they're going to look at your credit history. They're going to look at your pay, all right, and any other types of incomes you may have, and then that goes into those calculations. So even though the VA will insure a house up to $300,000, you may only be applicable, or you only be eligible to purchase a house maybe for $200,000. Okay, so don't confuse the two. And one more point on that matter is that the VA does not give you the loan. They're backing it up, all right? So you still have to go to a bank to be pre-qualified to submit all the paperwork. They're backing up. You're not getting a check from the VA. You're getting a check from Tidewater Mortgage, from Old Point Mortgage, and so forth. All right, so that's the big difference. All right, so before I go into another topic, and it's just really fast about what's coming up, just to review, okay, your good credit. No credit does not mean good credit. You have to build a credit history. And one more point to that, if for some reason a bank won't give you a credit card, go to a department store, go to a JCPenney, you could go to Macy's, whatever is open right now. Peebles is closing now, but you could try a department credit card. Sometimes they're a little bit more lenient on the credit, but they charge a higher interest rate. But if you need to establish a credit history, you need to do it. And when you buy something on these, right off the bat, buy a dress, buy a shirt, and then pay it off. Don't even do the minimum payment. Just pay it off, because you want to quickly push up that credit score, okay? And once you establish, let's say you have to go towards the department store credit, once you go and apply for that, and after 2 or 3 months, you establish a credit history, and then you could go back to the bank and say, I want to try again. All right, you might want, with the same bank, they might, or the same credit agency that you apply to, whether it's a bank or something else, a target one, you might have to wait 6 months before you reapply. But once you worked on that history, and you on that credit card, you bought something, you paid it off, it's been 2 or 3 months, then you could go to another company that offers MasterCard or Visa and try out for them. Okay? Keep those balances low. That's also going to be part of that, the determination of how much credit the bank will allow you, or if they're going to approve you at all. Keep those balances down. Don't have high balances on it. Keep it, I would say, at 50% of what the credit line has been afforded to you. So if you have a $2,000 credit line, don't go more than $1,000 if you can, and maybe even less. But keep those balances low. Your salary is part of that mix, how much money you make. And the fourth one, when we talked about VA loans, the VA is guaranteeing the money. They're not giving you the money. Your eligibility is different from your pre-qualification, right? And how much you could purchase, two different things. All right, what I wanted to do, and if you go to my blog site, Real Estate with Mr. G, it's a reverse mirror, .blog. There are the minimum of 5 article posts per week, and also videos on it. And you will see that itself, the real estate market is doing good. We need listings, and I've said that through many of my broadcasts that we really need listings. And there's some reports that people are feeling a little bit more comfortable now about listing their homes because of fear of COVID-19. And all these reports are very positive, but I want to be as truthful as possible. And again, it's speculation on my part, but it's based upon other articles that have appeared online in different newspapers and Forbes, the New York Times. And there may be trouble down the line. And one thing you have to remember is that a good stock market doesn't mean a good economy. When you have businesses closing and going bankrupt, when you have prices going up because manufacturing or farms don't have enough people attending, doing their work because of COVID-19, and now the price of products that we buy have gone up, and we have inflation. When you have inflation going up, and honestly, we're in a recession right now because we have about 30 million people out of work. And 2 weeks ago, the GDP report came out that said, our GDP, our gross domestic product, is down 33%. And that's going to snowball even more. So an article that was on my post today, and okay, let me open this up again. Okay, am I seeing it up here? Oh, here it is. Here it is. All right, and I'm actually going to make this full screen if I can, or make me smaller. Okay, here I am, nice and small. And I'm going to go back to this article. And it's the beginning of an economic recovery. And they're talking about, there are good signs on the horizon that we are on economic recovery as for the amount of people out of work. But I've been saying this note over here, and I've been saying this since I've been doing this broadcast. A strong economic recovery depends on the effective and sustained containment of COVID-19. And I've said this many, many times. Okay, I've been doing this now for about 2 months my live streams. But the longer we are dealing with COVID-19, the longer it will take to get out of this economic problem we have right now. Because the longer it takes to get people all back to work, to get to all different types of industries going back on track. Remember, we are in, and let me go back to in the Hampton Roads area, and besides the military and besides shipbuilding, one of the biggest industry in this area, of course, is tourism. Now we've completed a summer with Busch Gardens not being open. Williamsburg, I don't think I'm not so sure if they had people going, but I'm going to say no. Okay. You had people go to Virginia Beach. Okay. But again, the hotels didn't reach their capacity that they would have liked. And not only these certain industries, but then you have the industries that feed off of that. Your restaurants, your concession stands, your places that sell T-shirts and so forth. And it goes on and on and on and on. So everything depends. And maybe next week I'll do a show with the articles I've been collecting that's showing we're going to go into a recession next year. And again, it doesn't mean we're definitely going in that direction, but we have to be aware of what might happen. Okay, so of course, as a real estate agent, I don't want a recession. I don't want a deep recession, have people out of work and people not being able to buy homes. But it's something we have to consider and find ways to combat it. But the underlying factor to this is the faster way that we deal with, and I pray to God that we get a vaccine for this issue, for this COVID-19, and that would be one sure way that we could start slowly crawling out of this, some will call it a V-shaped recession, a W-shaped recession, whatever, to start moving upwards. So that's on the forefront. Right now, when we talk about the real estate market, it's doing good, especially with the very low interest rates. But some things might change in the beginning of January. I'm just keeping that in mind. Okay, so that's what we discussed. That's what we discussed today. I always like to keep this about 30 minutes to keep your attention. But I think I'm getting a signal from my producer, Leonard. Leonard?
Chris. Great news. We have a special guest in the audience. He is an American film and stage actor. His performances in classical Hollywood cinema films made him an American cultural icon. In 1999, the American Film Institute selected him as the greatest male star of classic American cinema. Ladies and gentlemen, Mr. Humphrey Bogart.
Wow, that was impressive. Honestly, I didn't know he was still alive. But anyway, that's our show for today. And be safe, be well, wear your mask, stay 6 feet apart, be caring and loving to each other, most important. And I'll see you next week, 10 a.m. for Live with Mr. G. Thank you. I'll let just the music play.